So we've talked a lot about PPP loans and we've done a lot of videos on those, but we haven't touched a lot on EIDL. And the other day I had a friend who called and she said, I'm an independent contractor. I don't make a lot of money. Do I qualify? And I realized that there are a lot of questions still out there that people don't know. So let's start off with the top 7 questions about the EIDL. Do you need to make a certain amount of money to qualify?
I think we kind of have to break that question down into 2 parts. First thing is you've got to be in a trade or business. So you have to be continuous and regular. And before we started this video, you were mentioning that there was this person that you ran into that was, working with speech therapy. And, is that, I call it the side gig, and gig economic, or the gig economy, I should say, is becoming much larger. And I think with COVID-19, it's even becoming multiplying. So I think to the question, do I have to make a certain amount of money? Mm-hmm. The first statement, if I'm in the trader business, how do I know that? Are you filing a Schedule C? Do you pay self-employment tax on it? Now, if you're an LLC partnership or S corp, we already know that. Mm-hmm. But I've got that little side job, and that's what I'm running into at the office is, do I qualify? First thing is, know the old law. Are you in a trade or business? Are you filing the Schedule E? Are you filing the Schedule F? So the thing about it is that that's the first step. Because if you get checked, they're going to say, give me your Schedule C. And that Schedule C is subject to self-employment tax, which means I'm in the trade or business.
And what was the Schedule C?
That's on the 1040. Mm-hmm. It's for income from a trade or business.
Okay.
And so, for example, let's do an example of this person doing the side income on the therapy. If it's kind of here and there, a couple $100 this month, we skip a month or two, $200 or $300 there. Well, that's an indication of not continuous regular, which is a very specific definition in the Internal Revenue Code. And as a result, that would not be a trade or business. But if the person is continuous and regular, every month making $400 or $500, mm-hmm. One month maybe 2, but the next month 6, maybe 4 or 5, 3 or 4. The point is that is continuous and regular. So there's not this magical dollar. It's the effort. It's what's the action? To an independent group of jurors, would it look like that you're making an attempt in a trade or business? And again, I think this question is much greater than it would have been 20 years ago because of the gig economy out there. The Uber driver, the speech therapy on the side, that second job, that second income. So there's no magical dollars. If you're in the trader business, $400 or $500 a month, then at that point in time, apply for the EIDL.
So independent contractor has a Schedule C, correct?
Yes.
Yes.
And if they are in a regular business making $400 or $500 a month, this is you. You would qualify.
And I think, John, that even brings in another question, which we did in one of the short snippets on PPP, and I think it'd be appropriate here, is the fact that an independent contractor, think of the universe of making money from what you do. I call it the sweat. There's investment, there's interest, dividends. We're not talking about that. So in the sweat world, you're either an employee or you're an independent contractor. I'm a partner in a CPA firm. I'm technically an independent contractor because I don't get a W-2. So think W-2 and no W-2. Mm-hmm. Okay. Independent contractor is that truck driver getting a 1099. An independent contractor is a person cleaning a person's house. An independent contractor is doing photography on the side. An independent contractor is raising dogs. Okay. So that independent contractor means I'm not working for somebody else. And I think that's a good general rule. Are you making money and are you doing it on a W-2? No. Well, it sounds to me like you're an independent contractor. So look at it as a universal question. My sweat, if I'm not working for somebody else on a W-2, mm-hmm. then I'm an independent contractor if I'm in a trade or business. So you would qualify for this.
That makes sense.
Great question.
Yeah. All right. So on the application, it asks for your cost of goods sold. Do you have an easy way of people knowing what that is exactly?
There, I'm going to have to go back to experience what's been happening over the last few months, because actually this program, the EIDL, has been around for a few years. So you can get major loans on this EIDL. This attention that we're getting because of COVID-19 is on this $10,000. And one of the prior videos, Laura, we were talking earlier on the prior videos, I call it the EIDL Grant. It's $10,000. So this, what we're really focused on here today is that $10,000, because the program that existed prior, I could qualify for hundreds of thousands of dollars, up to 30 years, and I have to repay it because it was what it is. It's an economic injury disaster loan. Program been around through SBA a long time. This is just kind of like an add-on, and the add-on is the $10,000. So that is a grant. And at that point in time, when asked the cost of goods, that's kind of from the past. And from what I can tell you, people don't understand the question. And when you look at how they give the grant, so to speak, it's $1,000 per employee, and it's $1,000 per owner. Now, there's certain restrictions we'll probably need to talk about here in a few minutes, but the important thing is that the cost of goods sold has nothing to do with what they're going to pay you. So if we'll go back to Schedule C on the 1040 as an example, there's actually a section you determine the cost of goods sold, and on that form, on the Schedule C, it is a line that says cost of goods sold. But that brings up another, question, is that who has cost of goods sold? Not everybody that's in a trade or business. Not every independent contractor has a cost of goods sold. If I'm doing something for so much, and I'm not selling you, if I'm selling you this cup, the cost of that cup is my cost of goods sold. But if I say, no, I'll write an article for you, I don't have any cost of goods sold. Put something in there. Because, and I've seen people do everything from zero to their whole,
That's
all
what
their
I was wondering.
expenses.
Is that just a zero if you have nothing?
And it could be, because I've had people say, I haven't looked at their stuff, but I've had people say, I didn't put anything down, I put zero.
And they're not going to see that zero and say you don't qualify.
No, because that, again, is not part of the grant. Now, if you go back to the loan part, that might get your loan rejected. So that's what I keep telling people. This is not just this little cakewalk, and in this case, it's fairly straightforward. But the point of it is, put something down, and, you, if nothing else, put your expenses down.
And that's my friend. She kept on saying, are you sure that they're not going to look at this and say I don't qualify because I don't make enough money? I don't have any expenses. Will they think that I'm a real business? But she makes between $400 and $500 a month. So we know that she is in a business. She pays self-employment taxes on it. So somebody like that, they can rest assured that they do qualify. Zero expenses does not equal that they're not, that the government's not going to give them the loan.
Correct. You could have zero cost of goods sold. And I gave the example. If I write articles, I'll have some kind of computer, I'll write it off. But to have cost of goods sold, if I'm not selling something and I'm in a trade or business, I still qualify. But remember, let's go back. The Paycheck Protection Program is based on income. This is based on number of people. Owners, certain owners should qualify, certain owners, and employees. Up to 10. Once you get to 10, all bets are off. So again, here we're given the general rules, and as we go through your 7 questions, we're going to find that I may go back and say, hey, but this, and right there's a good one. Up to 10, up to 10 people. Notice I didn't say cost of goods sold.
Yeah.
So let's just, not a big one, but it's an unknown, which makes it big.
Well, and it leads right into the third question is, if I'm an independent contractor or small business, which, is the same thing basically, without employees, do I put down 0 or 1 for my number of employees?
Well, for your number of employees, and I'm going to say this, if you're a sole proprietor, you're going to put 1. If it's a partnership of 2, you're going to say a partner of 2, because you get $1,000. See, when this first came out, people can go back and look. When this first came out as the grant, the up to $10,000 grant, it was you could apply and get the $10,000. All of a sudden, figure out there wasn't enough money, so SBA had to do something to get money the theory was the first come, first serve wouldn't work because all of a sudden they'd be out of money. So what they said is what we're going to do is we're going to base it on this formula. So that's why I've had clients get 1,000, 2,000, 5,000. I've had them get to 10,000. And again, it's because of the number of people. And so so it went from when it first came out, you just get a flat 10,000. That didn't happen. Those people waited. I know of actually a couple that's a friend of mine. They were right out of the gate. They applied literally the day it opened up, and they waited over 2 months to get it. Whereas now, that's not the case. But they thought they were getting $10,000. It was a husband and wife with no employees. They put 2, and they got $2,000.
So if it's a partnership, you write down 2. If it's a sole proprietor, you write down 1. If it's a sole proprietor with 1 employee, you write down 2. It just, however many.
Yeah, I want to back up right there because when you say it's a partnership, you write down 2. It's if you're a partnership. So if it's like you and Will and I, that would be 3. So,
I should have clarified that.
Yeah, so
right?
I'm just saying it's based
however many partners there
how
are.
many other partners. Mm-hmm. But the other thing, here's one of those that we need to qualify, and that it is that I'm an LLC. Well, if I'm an LLC, Schedule C on the 1040, that's 1. That's an owner of 1. If I'm a partnership LLC, that's 2 or more partners. Okay. If I'm an S Corp LLC, all of a sudden I'm an employee. So there, when you go to fill out this form and you say, okay, I'm the owner and I have an S Corp, do I put down 1 or 2? The answer is 1. Because there, the S Corp has no income subject to Social Security. That's an investment. So you look at an S Corp, they pull out a wage, and what comes through on that K1 is not another person. You only got 1 person. See, on a partnership, they don't get a W-2. They just get the K1. So that's why you get 1 per partner, but on the S Corp, you get 1 per owner that's an employee. Very different outcomes. So you see how that, do I put, what's my number? It's based on knowing the tax law and knowing who is getting, again, this is, the purpose of this is to get money to people that are in the business. And in this case, it's to get $1,000 per person that's working in that business. So just step back and look who's working in the business. That's the number.
So number 4 is a big one, forgiveness. How do people get forgiven of this grant? Is there something they need to do?
I pause for a second because, the general, all good tax law has exceptions. And all good tax law, every word has more than one definition a lot of times. So what's going to happen is on the debt forgiveness, the general rule. 1, you apply. Let's say you get the $2,000. I'm going to use the couple I know because I'm sitting here talking. That's who I'm envisioning because I've talked to them several times. And so they got a $2,000. Well, if you look up the qualified expenses on the EIDL, there's a list. It looks a lot like the PPP, except it's more liberal. So as long as you spend it, it even covers the increase in cost of material. If you're paying payroll, the most important thing is to write it out of your business bank account. Now, I have people say, I don't have a business bank account.
Right.
Okay. Well, you're in business. And it's the old duck theory. If it walks like a duck, it acts like a duck, it looks like a duck, it's a duck. If you've got if you're in the business, that's separate. You got a separate bank account. You got a set of books and records. And it may be on a piece of white paper here going, here's my deposits and here's my expenses and I've that's fine. But it's separate. Again, a business should look like a business. And so in that light, if you do have that, if you have a business account, just be sure you're writing checks out to yourself. Be sure you're paying, the mortgage payment, the interest, be sure, those all qualify. Pay your employees, they all qualify. So if you'll just keep track and write the checks out, you'll be okay. So the 1,000 and their 2,000, I told them out of their business account to be sure and pay out the $1,000. It's a draw because they're partners. So that's not a W-2. They're partners. So remember, for this purpose, when they say in the EIDL grant, they're interchanging again the word employee with the word of an owner. So the important thing is write the check. If they're commingling the funds, I don't recommend that. Get a separate business account, lesson learned. But even out of that account, write yourself out, I don't know, for, I hate to say cash, but the thing about it, pay some bills with, personal bills with it. But the clean way is to have a separate business account.
Great. And so they don't have to apply for any forgiveness. They just need to keep records in case they get
like an audit.
Yeah.
Yeah. And I think I like the statement in your question to kind of summarize what I was saying is because you got to keep the records because they'll check you. But when I started, I said the general rule, it's in effect, I would call a grant, which means if you apply for it and you get it, it's yours. But if they check, then you've got to be able to show how you paid it out. Mm-hmm. Now, there's another one. There's several people that applied for this, the EIDL grant, and also the PPP. And if you look at the PPP form, on it, there's a line, did you get any EIDL? So if you got, here we're back to the same thing. In our original double dipping, you can't, you can qualify for something, but you can't double deduct or get double reimbursed. So if I got a PPP, whenever I go to apply for the forgiveness there, then what I get in the EIDL is going to come over on that app and be combined into that as a total amount. And at that point in time, if you haven't spent the money right, then you could end up, it's going to reduce your PPP payment. So you're not going to have to repay the EIDL, but it's going to increase the amount of expenses on that form. And see, that way you won't, the neat thing about that, you can't then double dip.
So you can't use the same expenses. You can't use the same payroll on the EIDL as you do on the PPP for forgiveness, correct?
You can't use the same, but the way it works, because you take the amount of the grant on the EIDL and put it over and up the amount of the money that, no matter which program, then that makes you account for it. So when I say I guess the thing we need to look here to wrap it is that if I do the EIDL grant only up to $10,000, and that's all I do, then I've got to save my documentations in case I get audited. Because specifically when it came out, it said you get this $10,000, it's yours. It's yours. But if you also apply, and I got these questions early on from my own clients, well, can I do both? My answer was, after a little research, yes, but you cannot use the same expense to keep both. And so I'm going to go back. How they do that is it's not you file two separate forgivenesses. It's just if you have PPP, this was a good move because this keeps clarity, then whatever you got in the EIDL grant up to $10,000 comes over here on the PP, on the debt forgiveness. So that way you don't double dip.
Yeah. That makes sense. For a little confused, if for the person who's making the $500 every month, teaching whatever online, they qualify, they get the money, but that money are you saying that money should probably go into, because they don't have a business account, they just have a personal account, and the money that they make just goes into their personal account with, the spouse's money. When they get that $1,000 or whatever it is best practice to create another bank account and put it in there and spend it only from that account?
Yeah. I think that's a great recommendation. Also make it a business account. And from that day forward,
keep that. Use that. Put that money in there.
Yeah. Right. Become more compliant.
Make what you think isn't so official. Just because you're only making $500, that's still money. That's still money that you're putting back into the company.
Yeah, it's like I always tell people, if you think you're making too much money, my fees are deductible. How low do you want to take your income?
Yeah.
And I have
treat it as a business.
But John, that's a very good point, because I do have people that actually put it in a separate account. But if you are if you don't have a separate business account and you're doing everything through your personal account, if you get audited and you have losses out of it, the first thing you're going to do is, that's one of the 9 points of a hobby loss, is do you run it like a business? or is it commingled? So if you're just kind of, because then you put your expenses down under IRS audit, you're actually raising the potential of an audit adjustment, because they're going to look and say, well, if you're commingling your personal stuff with your business stuff, you probably got some personal expenses in here. We're going to take a deeper dive.
And now they're in your personal life more than they otherwise would be.
Right. The phone call I had earlier before we started this was exactly that. It was the fact that the people were not keeping the money in the right account. Well, and her reply was, well, I know where it's at. It's like, no, if you get business income, it should go in the business account. You don't put it in your personal account. And that's what the agent is looking at.
The first thought for someone's mind would be, this is no big deal.
But to a
it's just me.
Right. But when somebody else goes to audit you,
right.
Hello.
Exactly.
Yeah.
They can't see into your brain.
Yeah.
See what that money is.
Well, but what you're doing is when you look at audit proof and a return, the very first thing you do in a business, separate bank account,
right?
Separate set of books and records,
right?
The duck walk. Mm-hmm. It needs to walk like a business, act like a business, and look like a business. And if you ever get an audit, or they ask for these records, what will happen is that it's a much easier pain, because you got good, clean records, things are accounted for, so all your business expenses look like business.
Sure.
Because you've already separated them.
Right.
So what about the due date? What is everybody's due date to apply?
They've changed it, and I believe it's now December 16th of 2020.
Which means plenty of time.
Plenty of time. Yeah. And again,
and you're getting your money fast.
We did a short video on this and told everybody, all the different types of, businesses. Again, I'm going to go back to that side gig. That's where you come up with the gig economy.
Yeah.
What's your side gig? You're a DJ on Friday night. Again, you mow lawns.
Do we need to worry about them running out of money, though? Do we need to hurry up and apply because the government might run out of money?
First thing, it is possible to run out of money, but right now, the way it looks, it should be, they've kind of learned. So as far as I know, there's still funds available.
Good to know.
Because they did that second,
sure, wave of
funding.
Funds.
So at this point in time, it looks like it's okay, but get in there and get it.
Yeah.
Okay. Number 6, how long will it take us to know that we qualify?
Well, as I mentioned earlier, back in April, it was a couple of months, but it's supposed to be in 3 business days. And I think, some people are getting it next day.
Yeah. I think my friend
I don't want to
got
promise, but like every good thing, electronics sometimes doesn't work. So I don't want to say, I don't want somebody to say, well, they said the next day. Right. So it's supposed to be in 3 to 5 business days, but I am hearing people getting it the very next day.
Mm-hmm. Yeah. Money in the account the next day. And number 7, where do I go to apply?
SBA.gov.
Not through the bank.
Yeah, don't go to your bank.
Go directly to the
right.
SBA.
Mm-hmm. And but that is a real good point. You can go online and it takes 3 or 4 minutes.
Done. Over.
It's done. Yeah. As long as you get by the cost of goods where we started, put something in there. But again, it takes about 3 to 5 minutes to fill out.
Yeah. I think we answered like 3 of the questions. Other than that, I think it's personal information and
Yep. About 3 to 5 minutes.
Sounds good.
I hope this helps. And I want to thank you for listening. Please subscribe for other developments. We're going to be here within the next week, we're going to be hitting the quarterly payroll, the 940-941 stuff. So we look forward to seeing you again.
Sorry, I just lost all my train of thought. Stop staring at me like that.
Who?
Okay.
Let me look.
You bust your head open. You got to go to the ER, come back and teach 8 hours. You just never know.
That could have been the most unbelievable.
She just showed up with blood on your face.
Well, the crazy thing, if I hadn't had to check in and check out time at the hospital, nobody would believe me.
Yeah.